Hello, hi guys. This is CA Balakrishna. How are you? Hope you people are doing well. Even I am fantastic. As you already know, in the previous class, we have started with a revision of CA Inter Audit, right? And we have completed a first chapter revision. Now, in the today's class, we will be revising second chapter, and as usual, our revision it will be from these summary charts. So, without any delay, let's start with the revision. So, what is the name of this second chapter? It deals with ethics and terms of audit engagement. Ethics means we have learned about ethics even in this first chapter. The five fundamental principles we have discussed in the first chapter, right? The same things will be there here also. And the second thing is engagement letter. With respect to engagement letter, we have SA-210, right? So that 210 also we will be discussing in this particular chapter. Okay, so first of all, starting with professional ethics. Now, in this professional ethics, first of all, let us understand the meaning of the term ethics. Basically, ethics is a moral principle. Like, for example, you are going on a road and you found a wallet of some other person, and in the wallet there is some amount, and along with the amount there is also identity of that person to whom the wallet belongs to. Now, if you are a ethical person, what you will do, you have to return that wallet to that particular person, right? So that is meaning of ethics. Now, if you apply this ethics to our profession of chartered accountancy, that becomes professional ethics. Now, our Institute of Chartered Accountants of India, it has framed certain ethical requirements in the form of code of ethics, and it has asked all the chartered accountants to comply with these code of ethics. These are nothing but professional ethics. Okay, so if you see meaning of ethics, first of all, ethics is a moral principles, and these ethics they will come from individual intrinsically. Intrinsically means from within the individual. The ethical values has to come obviously, right? Some persons they will be ethical, and some other persons they won't be ethical, right? So ethics has to come from individual within intrinsically. Next, it is inculcated in the habit of the person. Okay, the way how the person has been brought up, what is his childhood, all this will impact the habits of the person. So ethics has to be inculcated in the habit of the person, and it is a state of mind. So these are the terms that you need to remember with respect to meaning of ethics. Just a second. So that is meaning of ethics. Now, okay, we understood what is meant by ethics, but what is the requirement of ethics for our chartered accountancy? Why we chartered accountants should follow these professional ethics? Not only for chartered accountants, even for various other professionals like doctors, police, lawyers, they will have their own ethics. Now, in particularly, why ethics are very much important for chartered accountants, let's see. First of all, the services that the chartered accountant provides. First of all, audit. Now, what is meant by audit we have discussed in the first chapter. Audit means you are upholding the confidence of users on the financial statements. Now, if users has to get confidence on the financial statements through your audit, first of all they should have confidence on you, right? First of all, users should trust you. When will the trust of a person increases? If he is more ethical, his trust on him will increase to public, right? So since the services provided by chartered accountant are such that the users has to trust the chartered accountant, right? He will deal with financial aspects of his clients. So to uphold trust reposed on CA services, all the chartered accountants has to follow professional ethics. Okay, next, to enhance the confidence of intended users. Obviously, if the chartered accountant who is performing the audit or who is performing any other service for the client is following more ethics, he is more ethical, then of course the other person, the client, will have more confidence on the services that the chartered accountant is providing, right? So that is also one of the purpose why you have to follow ethics. Next, of course, since our ICAI, it has issued these much volumes of books by name Code of Ethics. If you go to our ICAI website, there you can find Code of Ethics. Okay, there will be some 3 volumes of Code of Ethics. So in these Code of Ethics, ICAI has given ethics and asked all the chartered accountants to follow these ethics. So you have to follow. Okay, so issued by Code of Ethics. What will happen if you don't follow ethics? Disciplinary mechanism will be initiated against you. Disciplinary mechanism means you will be liable to punishment, you will be liable to penalty if any person complains about you to chartered accountants, to ICAI, that a particular chartered accountant is not behaving ethically, that is, he is not complying integrity, he is not maintaining confidentiality, like this. If any person complains to institute about the chartered accountant, then institute will initiate the disciplinary mechanism. There is a separate body in the ICAI for dealing with the complaints against the chartered accountants. Okay, so as per that disciplinary mechanism, the chartered accountant will be punished. So if you don't comply with professional ethics, you are liable for punishment, you are liable for disciplinary mechanism. This is also one of the reason why you have to comply with professional ethics. Okay, sir, you are telling professional ethics, but what will be there in this professional ethics? Mainly the discussion will be with respect to 5 fundamental principles that we have discussed even in the first chapter. In SA-200 we have discussed now 5 fundamental principles, the same thing. Okay, fundamental principles as per Code of Ethics. What are the fundamental principles? Integrity, objectivity, confidentiality, professional behavior, professional competence, and due care. These 5 things we have clearly discussed even in the first chapter also, the same things. Okay, next, and there is also one more quality that the auditor should comply with, which is professional skepticism. Professional skepticism includes 3 things. While auditor is doing the audit, he needs to have questioning mind. This is the first thing that will be there in the professional skepticism. First of all, this professional skepticism is a attitude. Okay, it is the attitude of the auditor, and this attitude includes questioning mind. And the second thing that will be there in this professional skepticism, that is the attitude of the auditor, is critically assess whatever the audit evidence that the auditor obtains. This is the second aspect of this professional skepticism. Okay, critical assessment of audit evidence. And the third thing that should be there in the attitude of the auditor is being alert to possible misstatements. Okay, during the audit, auditor should be very alert wherever he finds any misstatements. Okay, he should search for misstatements. Got it? So professional skepticism is a attitude of the auditor, and this attitude includes questioning mind, critical assessment of audit evidence, and being alert to possible misstatements. So what are some of the examples of situations where the auditor has to be alert? Such as following examples: if there is contradicting evidence means 2 evidences related to same aspects are not matching. Let's say, for example, debtors balance. For debtors balance, internally you have obtained all the sales invoices made to that particular debtor, and those sales invoices, if you total, it is showing 1 crore rupees. If you have you also obtained another evidence which is external confirmation of that particular debtor, and the debtor, he is saying that I have to pay only 80 lakh rupees. So if you see, as per the internal evidence, it is showing 1 crore. As per the external evidence, it is showing 80 lakh. So like this, if there is any contradicting evidence, then auditor should be alert, because there could be misstatement in this situation. Next, questions about reliability of documents. Okay, if auditor feels that the documents that the management has submitted me, they looks like fake documents or improper documents, in such a situation also auditor should be alert for misstatements. There could be misstatement in that area. Next, possibility of fraud. Okay, you should also be alert whenever you find out any conditions that might indicate a fraud. And circumstances suggesting need for additional audit procedures. Okay, you have performed a particular audit procedure for a particular area, and that procedure is not giving you proper audit evidence. In such a situation, what you have to do, you have to perform some more audit procedures, additional audit procedures. So in situations where additional audit procedures has to be performed, there also you should be alert. Got it? So these are some of the examples of situations where auditor needs to be alert. Next, in this code of ethics, discussion with respect to independence is also made. About this independence also, we have discussed in first chapter. What is meant by independence? Independence means not showing biasedness. You should not be influenced by any third party's will and wishes. That is known as independence. Right? So let's see about, okay, before going to independence, for following these code of ethics, for following these professional ethics, there are two approaches in which you can follow the professional ethics. First one is principle based approach, second one is rule based approach. So what is this principle based approach and rule based approach for following the professional ethics? See, under principle based approach, you will see what is the spirit of that particular principle. Okay, what that principle is saying me to follow, that you will see. Let's say, for example, as per the rule, auditor needs to obtain audit evidence about inventory as on 31st March of every year. Okay, because financial statements, they will be prepared as on 31st March. So as on 31st March, auditor needs to obtain audit evidence that physically inventory is there. So he needs to visit the inventory location for physical verification and obtain audit evidence. But on 31st March, huge rain has occurred. Now, if huge rain occurs and the rain is so much and the floods are so much that auditor cannot visit the place where inventory is located, in such a situation, what the auditor can do, if he is following principle based approach, the principle is saying that you need to obtain audit evidence about the existence of inventory as on 31st March. But as on 31st March, actually you are not able to visit the location. Then as per principle based approach, here what you can do is you can perform audit, or you can perform the physical inventory verification on, let's say, 3rd April. Okay, on 3rd April, all the rain is stopped and the floods have also been normalized. So on 3rd April, you can visit the inventory location and you can take physical inventory counting. Okay, you got the evidence about physical inventory as on 3rd April, but actually you want physical inventory verification evidence as on 31st March, right? So what you will do, for this amount, you will add the sales and you will less the purchases that has happened during this period, okay, from 31st March to 3rd April, whatever the purchases have happened, that you will less from this balance, and whatever the sales have happened, you will add to this balance. By doing that, you can arrive at inventory as on 31st March, right? So under principle based approach, you will try to achieve what the principle is saying. Your focus will be on that. But okay, so you will see what the spirit of principle is, okay. But if in the same situation, if you are following rule based approach, here under rule based approach, what you will do is, on 31st March you have to obtain all the evidence about the inventory, but there is rain, very huge rain. In this situation, since you are following rule based approach, you will strictly comply with the rule, you will strictly attach to the rule, okay. And you will go on 31st March only, even if on 31st March rain and flood is there, okay. So in case of rule based approach, you doesn't see what the rule is, what is the spirit of the rule. You will not see what is the spirit of the rule or the principle. You wanted to strictly comply with it, okay. But under principle based approach, by doing whatever the thing you want, you will try to achieve the spirit of the rule, okay. So principle based approach, under principle based approach, you will comply with spirit of the ethics, okay. By doing whatever the thing you wanted, you will try to achieve what the principle is saying, okay. And you need to exercise your professional judgment if you are following principle based approach, because based on the circumstance, you have to decide how you can achieve what the principle is saying, okay. How to achieve what the principle is saying, for that you need to apply professional judgment. We have discussed what is meant by professional judgment. Next, under rule based approach, you have to, or you will strictly follow the rule. If it is 31st March, I will go on 31st March only, whatever might be the situation, okay. And it is having narrow outlook, and it is rigid, okay. So that is principle based approach and rule based approach for complying with ethics. Next, coming to independence. What is meant by independence? Independence means judgments are not subordinate to wish and will of some other party. And there are two perspectives for independence. What are these two perspectives for independence? First of all, independence in mind. So independence in mind means it is a actually you are independent, okay. Auditor, he is actually independent in his mind, okay. Next, independence in appearance. Independence in appearance means reasonable third party who is having complete information about the relationship between auditor and client. By seeing their relationship, the third party should feel that yes, auditor is independent of client, okay. So independence in appearance means a reasonable third party, by seeing the relationship between auditor and client, he should feel that yes, these two people, they are independent. Auditor is following all the fundamental principles. Like this third party should feel by seeing their relationship. That is independence in appearance. Next, independence in mind means not for the third party. Auditor, he himself, in his mind, he should actually act independently. Now tell me, is independence in mind is sufficient, or independence in appearance is also required? The answer is both. Independence in mind and independence in appearance, both are required. Got it? Yes. So that is independence in mind and independence in appearance. Now, auditor, he has to be independent, but there are some factors that will prevent the auditor from being independent from the entity. We will call those factors as threats to independence. Now, there are basically 5 threats to independence. See, threats to independence. What is threat to independence? Threat means something that prevents the auditor from being independent is known as threat. So first threat is self-interest threat. Self-interest threat basically arises from monetary relationship. If auditor has invested in the client's business, or if auditor is depending for a huge extent on the fee that the client is giving, or if auditor has taken loan from the client, all these things they will create self-interest threat. Because if, let's say, auditor has invested in the client, then he cannot act independently because he is shareholder of that client. And if he gives any mistake, if he finds any misstatements, or if he gives any qualified opinion on the in the audit report of the client, the share value will decrease. If the share value decreases, my money will lose, auditor's money will lose, because he has invested in that company, in that client. So this is self-interest threat which prevents the auditor from being independent. Next, self-review threat. Self-review threat means you have performed a particular work. Let's say you have helped the client in preparing financial statements, and you as an auditor also auditing those financial statements which have been prepared by you only. In this situation, you have only done the work, you are only verifying the work. Can you find any misstatements? Can you act independently in this situation? No, because of you can call this as self-review threat. Next, advocacy threat. Advocacy threat. What is meant by advocacy threat? You have promoted the client to such an extent. Let's say client is bringing its IPO, initial public offering, to the public. Now, auditor has promoted shares of a company, saying that you purchase the shares of company, company is going to make so many profits. So you have promoted the company so much that in future, if company makes any losses and you are auditor of the company, you will not be able to give proper opinion on the financial statements, because see, you have promoted to the public, you invest in this company, this will make profits, profits, profits. But after 1 or 2 years, it has made losses. Then what you will try to do as an auditor? You will try to give uh, different situation. Even though the company is making losses, you will try to say that, or you will try to put in your report that company is making profits. Okay, if management in its financial statements shown that even though the company is making losses, if they have prepared financial statements stating that company has earned a lot of profits, you will not object that misstatement, because already you have promoted to various public that company will make profits. Now if company is made loss, means all the public, they will be against you, right? So advocacy threat means where you have promoted the client to such an extent that you cannot act independently. That is advocacy threat. Next, familiarity threat. Familiarity threat means you have become so familiar with the client that if there are any misstatements in the financial statements of the client, you are not able to properly report them in the audit report. Let's say you have been doing audit of the company for past 20 years. If you are doing audit for the past 20 years for the same client, means there will be proper relationship, proper bonding between you and the client. Now in this situation, if client has done any misstatement or any fraud, client requested you not to disclose these fraud in your audit report, then there is high chance that you will not disclose, because there is a relationship between you and the client, right? So this familiarity threat also prevents the auditor from acting independently. Next, intimidation threat. Intimidation threat means client is threatening you. If you give adverse opinion or disclaimer of opinion, I will remove you as an auditor. Client is threatening you like this. Or the client is having some 25 years or 30 years of experience, and the auditor is just now recently qualified chartered accountant. accountants, 1 or 2 years experience, and there is a particular accounting treatment which the client has done it in a particular way, but auditor is saying no, this should not be done in this particular way, you need to follow different accounting treatment. Then client is saying that we are having 30 years of experience, you just 1 year or 2 years it's been, you have qualified, okay, we have been following this treatment for the past 30 years. Like this, client is saying, this is also a intimidation threat where client is threatening the auditor. Okay, so this also prevents the auditor from being independent. Okay, these are the threats to independence. Now, if there is a threat to independence, auditor, will he sit silently? No, he will try to eliminate these threats, right? He will try to completely remove these threats. So, what are the actions that the auditor will take? How to deal with these threats? Firstly, auditor, he will try to eliminate these threats. If it is not possible to completely eliminate these threats, auditor will try to implement safeguards so that these threats can be reduced to a acceptable level. Okay, all the threats, it might not be possible to completely eliminate them. In such a situation, you will implement safeguards so that the threat can be reduced to a acceptable level. Okay, put safeguards to reduce threat to a acceptable level. Or if it is not possible to eliminate the threat, or if it is not possible to implement the safeguards and reduce the threat to acceptable level, the best thing that you can do is desist from doing that task or do not accept the engagement. Okay, or if you have already accepted the engagement, better withdraw from the engagement if you are not able to reduce the threat to acceptable level. Got it? So this is how you will deal with threats to independence. Now we'll move to SA-210. What is this SA-210? Agreeing the terms of audit engagement. If you see, in the first chapter we have discussed SA-200. In the second chapter we are discussing SA-210 also. See, now basically this standard, it deals with engagement letter between the auditor and the client. Engagement letter means contract between the client and auditor, is the technical term for the contract between the auditor and client is nothing but engagement letter. See, when you are purchasing any goods, when you are taking any service, you will enter into contract, right? Even audit is also a service that the auditor provides to client, so there should be contract between the client and the auditor. So the contract, you will call it technically as engagement letter. So in this standard we will see what will be the terms and conditions of this engagement letter, when you should issue the engagement letter, and what are certain preconditions that should be there in order to accept the engagement. All these things we will see. See, this is standard. It deals with when to accept or continue the engagement. Now, a particular person has come to the auditor. Auditor, please do audit of our company. Now, whether to accept that engagement or not to accept that engagement, how the auditor will decide? To decide that, auditor will first of all see whether preconditions exist or not. Now, what are these preconditions? See, preconditions to accept the engagement. First of all, the applicable financial reporting framework that the client has used for preparing the financial statements should be acceptable to the auditor. That is the first precondition. Okay, whatever the financial reporting framework as per which client has prepared the financial statements, that should be acceptable by the auditor. Next, auditor, he should get a agreement from the management stating that management understands their responsibility for preparing financial statements, establishing internal controls, and to provide the auditor with access to all information and records. Okay, management should agree to provide the auditor with access to all information and records of the company and additional information if requested by the auditor, and unrestricted access to people within the organization for asking questions to them. So these are the preconditions that should be there. Only if these preconditions are there, auditor will accept the engagement. First precondition is applicable financial reporting framework should be acceptable. Next, auditor should get agreement from the management that management will understand their responsibility for preparation of financial statements, understanding establishment of internal controls, and finally providing the auditor with all information and records, providing the auditor with all explanation, providing the auditor with access to all the people in the organization. So these are the preconditions. Only if these are present, auditor will accept the engagement. Next, another thing that the auditor will see is whether there is a common understanding between auditor, management, or those charged with governance with respect to terms of engagement. Okay, now there should be common understanding about terms of engagement between auditor and the management. It is not that auditor is understanding the terms in a particular manner and management is understanding the terms of engagement in a particular manner. No, in such a situation, auditor cannot accept the engagement. If there is a common understanding between about the terms of audit engagement between auditor and the management, then only auditor will accept the engagement. So this is the first thing that the auditor will see. Next, coming to engagement letter, audit engagement letter. Now, what is this audit engagement letter? See, first of all, engagement letter is simply a agreement between auditor and management. And what will be there in this engagement letter? There will be terms. Audit terms will be there. So in the engagement letter, at least at minimum, bare minimum, following terms should be there. What terms should be included? What is the objective and scope of audit? Objective means what is the goal, purpose of this audit. Scope means what will be audited. Okay, which areas will be audited, that is the scope. These two things should be there in the engagement letter. Next, responsibilities of auditor, responsibilities of management. Next, engagement letter should specifically identify the applicable financial reporting framework as per which the financial statements have been prepared. Next, engagement letter should also contain the format and content of the audit report that the auditor issues to the management after the completion of audit. So what will be the form and content of the report? That should also be there in the engagement letter. So terms and conditions with respect to these things must be there in the engagement letter. Got it? Next, let's say for example, management agreed to all the terms and conditions that are there in the engagement letter, and the auditor, he has started the audit. After starting the audit, if management wanted to change the terms of audit engagement, in this situation, what has to be done? In this situation, auditor has to see whether the reason that the management is giving for change in the terms of engagement, is it justifiable or not? Okay, whether there is a reasonable justification or not. Okay, management is asking you to change the terms of engagement, you will ask why the terms has to be changed. Management will give some reasons. Now auditor should see whether those reasons are they justified or not. Okay, so if change in the terms of audit engagement, auditor has to see whether there is a reasonable justification. Now what is meant by reasonable justification? There are two situations. Okay, if the change in the terms of engagement is because of two situations, only then you can call it as a reasonable justification. Otherwise you cannot call it as reasonable justification. So what is meant by a reasonable justification? If the terms of engagement have been changed because of change in the entity's requirement. See, entity wanted to take a loan from the bank, and bank asked that please give us the audited financial statements. So entity went to the auditor and said, auditor, bank is asking audited financial statements, please do the of our financial statements. Like this, engagement letter has been entered, audit is started, 2 or 3 days has been completed, and bank again called the management and said that management, we earlier told you that we require audited financial statements now, but no, audit is not required, just review of financial statements is sufficient. Review means we discussed in the first chapter, the level of assurance that you will provide in case of review will be lesser than the audit, and the procedures that will be performed in case of review will be lesser than the audit. So now what the management will do, management will again go to the auditor. Earlier we have asked for audit now, but bank is saying audit is not required, we just wanted review, can we change the terms of audit engagement? Then auditor, before changing the terms of engagement, what he will see, whether the reason is justifiable or not. Here what is the reason why management is asking for the change is because of there is a change in the circumstances. If there is change in the circumstances or change in the requirements of the entity, then that can be termed as a reasonable justification. So auditor, okay management, let us change the terms of audit engagement and we will do the review. Like this, auditor will agree for the change. So this is the first situation when you can call it as a reasonable justification. Next, if there is a misunderstanding of nature of service. Earlier, when auditor has given engagement letter, management thought that it is going to be a review, but auditor, he is thinking that it is going to be a audit. And after the work has started, management is doing the auditor is doing more audit procedures. Management asked, auditor, why are you doing all these procedures? This is only review now, you have to perform only some procedures now. But auditor is saying no, this is not review, we have agreed for audit now. So here there is a misunderstanding of terms of engagement. In this situation also, you can call this as reasonable justification for change in the terms of engagement. Got it? So now if there is a reasonable justification for change in the terms of engagement, yes, then auditor will accept the change. Once you have accepted the change, before accepting the change, auditor has to see what will be the legal or contractual implication because of this change. If I change the terms of engagement, what will be the legal implications? Should I intimate to any authority? This he needs to see. Next, if he changed the terms of audit engagement, he has to check whether the work that I have performed till now, can I use that work for the changed engagement also. He needs to see that once. Okay, work performed till date may be relevant for the changed engagement. Next, report shall not refer to original audit engagement. Okay, originally you have been appointed to do the audit engagement. Now there is a change in the terms of audit engagement. Now when there is a change in the term, when you are giving a report as per the changed terms, you should not refer to the earlier engagement, because to avoid users confusion, okay, to avoid confusion among the users, if you are doing the work as per the changed terms, please don't refer to the previous engagement in the report that you will be going to issue as per the changed terms. Got it? Next, okay, we have seen what if there is a change in the terms of audit engagement after acceptance of the engagement. Now before engagement acceptance itself, management is putting certain limitations on the auditor. Limitations means, auditor, you don't attend for physical inventory verification. Auditor, you don't send external confirmation to debtors. Like this, management is restricting the auditor even before accepting the engagement. In this situation, see, limitation on scope prior to the engagement acceptance. Then auditor needs to see whether this limitation will result me in giving disclaimer of opinion if I accept the engagement. In such a situation, it is better not to accept the engagement. So you shall not accept such an engagement. Got it? Next, so that is about the engagement letter. Okay, we have made complete discussion with respect to the engagement letter. Now there is one special case, which is recurring audits. What is meant by recurring audit? Let's say, for example, in the year 1, Mr. A has audited the financial statements. In the year 2 also, Mr. A only auditing the financial statements of the company. Then the audit of this year 2 for Mr. A will be treated as recurring audit. Now the question is, for the first year auditor, he has given engagement letter, he would have given engagement letter, right? Now whether for the second year also engagement letter should be issued, or can you use the same engagement letter that has been given for the first year? The answer, it depends. Okay, if certain factors are there, then auditor needs to consider giving a new engagement letter for the second year. So what are those factors? Let us see. So first of all, recurring audits. What is meant by a recurring audit? Performed by an auditor over the years, then you call it as recurring audit. Now the question is a new engagement letter required for recurring audits? Following factors may take appropriate to revise the terms. Okay, if following factors are there, then auditor may decide to give new engagement letter. What are they? First of all, indication that entity has misunderstood the scope and objective of the audit. Okay, in the previous engagement letter that I have given, I think the entity has misunderstood the scope of my audit and objective of my audit. Then what the auditor will do? For the second year, he will detailedly draft the engagement letter and he will give new engagement letter to the management. So this is one of the situation. Next, if there is revised or special terms, of course, if there are change in the terms of engagement, then you will give a new engagement letter for the second year. That is, of course, right? Just a second. So yeah, if there is any revised or special terms, then of course you have to send a new engagement letter, right? Next, if there is a change of senior management, like the CEO of the company has changed when compared to the previous year, or some of the directors have changed, managing director have changed, new managing director is appointed in the current year. In such a situation also, the new managing director, he doesn't know about the terms of audit engagement that were given in the previous year. So it is better to give a new engagement letter again. In the same way, if there is a change in the ownership also, then also it is better to give a new engagement letter. Next, if there is significant change in nature or size of the entity's business, see the type of audit that the auditor does, it depends based on the size of the entity and the nature of business of the entity. If the nature and size of the entity changes from previous year to current year, then of course it is better to give a new engagement letter as per the changed terms of audit. Next, if there is a change in legal or regulatory requirements, okay, there is a change in law or regulation that requires audit, then also new engagement letter is or might be required. Next, if there is a change in financial reporting framework, okay, in the previous year, entity has followed accounting standard for preparation of financial statements. So, and in the current year, they are following Indian accounting standards for preparation of financial statements. In such a situation, the way how you audit accounting standard financial statement will be different from the way you audit India's financial statement. So again, if there is a change in financial reporting framework, then you might have to give a new engagement letter again. Next, if there is change in other reporting requirements, so in all these situations, it is better to give a new engagement letter. So this is revision of second chapter. I'll be winding up this class as of now. We'll meet in the next class with a revision of a third chapter. Until then, take care. See you. Bye bye.